Imagine waking up one morning, pouring yourself a coffee, and deciding, "Today, I think I'm going to fight the entire United Kingdom." Most people would call the police. George Soros called his broker. This is the story of Black Wednesday. The day one man took on the Bank of England, the British government, and the Prime Minister, and crushed them all. He didn't use an army. He used a short position. And by the time the market closed, he had made $1 billion in a single day. Buckle up. This is the greatest Forex trade in history. The year is 1992. The UK had just joined something called the ERM, exchange rate mechanism. Basically, they promised to keep the value of the British pound tied to the German mark. The problem? The German economy was booming. The British economy was, well, garbage. Inflation was high. Unemployment was rising. To keep the pound strong, the Bank of England had to keep buying their own currency. It was like trying to hold a beach ball underwater. Eventually, your arms get tired. Enter George Soros. Soros looked at the chart and saw the obvious. He said, "The UK is broke. They can't keep interest rates this high forever. The pound has to crash." It was the ultimate asymmetric bet. If he was wrong, he'd lose a little bit on fees. If he was right, he would become a legend. So, Soros and his fund, Quantum, started building a massive position. He didn't just bet $1 million. He didn't bet $1 billion. He leveraged up and bet $10 billion against the pound. Think about that size. He was selling pounds faster than the Bank of England could buy them. On the morning of September 16, 1992, the selling began. The price of GBP started to slide. The Bank of England panicked. The British government tried everything. At 11 a.m., they announced they were raising interest rates from 10% to 12%. That is a huge move. They thought traders would rush to buy pounds to get that juicy yield. Soros saw the news and he laughed. He told his head trader, "Go for the jugular. Sell more." The market didn't care about the rates. They smelled blood. At 2 p.m., the Bank of England panicked again. They raised rates from 12% to 15%. Imagine your mortgage going up 5% in a single afternoon. It was insanity. But the selling didn't stop. Soros and the rest of the world kept hitting the sell button. The Bank of England ran out of money to defend the currency. At 7 p.m., the UK government waved the white flag. They announced they were leaving the ERM. They could no longer prop up the currency. The pound crashed like a stone. It dropped 15% against the mark and 25% against the dollar almost instantly. Soros closed his position. He bought back the cheap pounds to cover his loans. His profit? $1 billion. He made more money in one day than the British taxpayers paid for their schools that year. The British press called him the man who broke the Bank of England. So, what is the lesson here for us retail traders? Fundamental analysis matters. Soros didn't use a specialized indicator. He looked at the real-world economy. He saw a broken system and bet on it breaking.